Hello, I'm Washboard Jim with a sneaky snake trading strategy, which I developed in the last couple of 2 to 3 years, and it's been forming for a long time. I've been trading for over 21 years in the market, and I have a simple strategy of chart patterns, moving averages, and being in the now. And I try to make it as simple as I can. And by reading patterns and learning them, it don't take long to learn them. And then once you start learning them, they start to show up. Then you start seeing miracles happen. So let's get into this real important pattern right now where you can try to find a support reversal. And we're going to show you exactly how to do it. So are we in a bull or a bear market? We're definitely bearish because of the oil news and the war in Iran. But I'm not that bearish. But I've been catching these knives on the bottom. I mean, my accuracy hasn't been as good as it has been in the past. You know, I usually get about 2 bad trades, if I'm lucky, a week. Here lately, I might be getting 1 or 2 a day. And there's just been a lot of false messages, signals that are coming in to me. And I've been trading a lot less. And then when I recognize a good day, I'm really climbing on in there and making big. Like the other day, we took an option to $4 and it ran to $3,000. And that was the SPX. And it happened within minutes. Within minutes. And I got in another one that ran up to $1,500. $15. And that was the SPX. But I got, I got lucky, I guess, because I bought it and then within minutes, boom. And those are the days you want to have. So I'm bullish, always bullish. There's always a trade to be made. But I'm not that much of a bear trader. I wish I was a lot better at it. I need probably focus more on it when I know that we're in a correction. I did call the correction months ago. Before even this war happened, we were pulling back and we had a pretty good correction. Now we've had a better correction. So I think the market's down 6 points from the S&P high, which ain't much. That's not much at all. Other stocks that have been pumped hard have been taking a good hit. I'd be keeping a watch list and watching them stocks and looking for good supports. So we're going to look at the IWM. Now, IWM, there's a couple patterns in here, but I want to show you one trend line that could get you in a trade real fast. And I don't know if you can recognize it. There's 2 patterns here, and I'm going to show you one of them. One of them is called the head and shoulders. This is a head and shoulders right here. So I called this head and shoulders out a while back. Now I'm going to put a trend line on the right shoulder and the left shoulder. And I'm going to use the bodies. Now listen, I'm going to use the bodies of the candle. That's the closing and opening price. So I'm going to take it and I'm going to run it up to that next shoulder right there. Could go a little bit higher, but that works. So we've got the left shoulder, the head, and the right shoulder. And then we have the pullback. Then we have the breakout. Retest the 21, then comes up and breaks that right shoulder for the second time. So that's your head and shoulders. Anytime you go into a head and shoulders, expect a pullback. Expect it. Just expect it. It's going to happen most of the time when you create that right shoulder, and then it's going to come back and retest. And it didn't. It came back and retest, but it failed, and it went on down. So always get out at that right shoulder. You got your left shoulder hit once, twice, almost with a wick. Then you got that right shoulder. And I lined that left shoulder up with that right shoulder and extended that out. So here, if you'd have charted that head and shoulders up on the weekly time frame, you would have recognized this buy signal right here. This is called 3 black crows and a long leg doji. I would have jumped in this trade in a heartbeat, and I probably did. In a heartbeat. I'm telling you, that's 100% gainer right there. So we came back and we did a tweezer bottom off that long leg doji. So you have 3 black crows. You know, people don't know what 3 black crows are, and if you look it up in the encyclopedia, it'll tell you it's a bearish signal. But I will tell you different. I will tell you it's a bullish setup once you wait for that 3rd crow. And then you got to watch what candles come after that third crow. And this was a long leg doji, which is a buy signal. And it bouncing off the 21 EMA 3 different times. The wick, the body, and the body. And then it broke out to a double top exit idea. Then we had another set of 3 black crows and another breakout. And then we consolidated for what? 7 weeks? 7 weeks we couldn't break resistance. And then she finally comes back, and she's back down here at support again where we were previously. So the big picture is, when you spot a head and shoulders, it's a great exit idea. Let it pull back and come back and retest that shoulder. If it doesn't break the shoulder the second time, it'll definitely knife pretty hard. In this case, these are weekly time frames. So we stood up here on this shoulder line for at least 3 weeks with lower lows indicators. So it definitely was bearish. It didn't break that second time to the upside. Now, if you pull it up on the daily, it might have, but on the weekly, it sure didn't. So when it came back and retested and it broke out, the second shoulder finally broke out, you're able to come back and retest that shoulder line. Now, I don't know nobody that's ever talked about this strategy. So when it comes back and touches the shoulder line, again, you're bouncing off the 21. So you got the 21. You got 3 different examples of a triple bottom off the 21, off these 3 black crows with that long leg doji. And I would have scalped that and run it up. I would have scalped it that day and maybe even swung it. But I'm a scalper, so in and out, come in the next day, in and out, in and out, in and out. So now we're coming back down to that support level. So that's called the head and shoulders. Now I want to bring you the buy signal on this trade. So we got a 2-headed snake down here. We got a double bottom, and we got an inverse head and shoulders. So you take trend line, run it from this shoulder line. This is on the weekly time frame, and run it up to that shoulder line. And that's a 2-headed snake. So once it broke, it came back and retested that. And still above the 9 EMA, which keeps the stock very bullish, as long as you stay above the 9 on the weekly time frame. But now we're retesting that right shoulder again on this head and shoulders. So we had an inverse head and shoulders, and we have a head and shoulders. Whoop. We got a head and shoulders, and then we got an inverse head and shoulders. So we're getting ready for another buy signal right here. I wouldn't be surprised if we start bouncing back up. We're coming in on that 63, and then you got the 50 SMA. But if we can hold this right shoulder and start to get some good news, this thing could run back up and have another head and shoulders right up here. So you have another head and shoulders. And let's get that price line in here. This thing could bounce off this here 239 area, and that's where I'm going to put my alert. You see this top of this peak right here of that head? You want to draw a price line all the way across on the body, using the bodies. Notice I'm only using bodies on this chart. I don't give a crap about the wicks. The wicks are a gift, and they're a confirmation to me. We pulled right back to that previous top of that head, and we stopped. I wouldn't be surprised if this thing starts to reverse to the upside on Monday. We have more of a chance of it doing it. If it fails, we got to look for something that's been respected down here on these moving averages. And I'm thinking the 50 SMA and the 63, and then we've got the 100 EMA. And that'll be down there at that right shoulder line. And we pulled back right there to that right shoulder line right there with that wick. Now see, this is what I mean by confirmation. I would have took that trade because that wick hit that body of that right shoulder. That would have been a no-brainer because that is also another buy signal. So I have, what, 1, 2, 3, 4 reasons to get into that trade. 4 reasons. 3 black crows, the 21 EMA, the long leg doji, and then that top of that right shoulder, which is right there to the penny. So that's the IWM. Now I'm going to show you how I called, that's called the head and shoulders and the inverse head and shoulders. Now I'm going to show you how I called the reversal on the SPY when we had that big pullback. So back when Trump got elected, we had the sell-off. It lasted for 2 months. And I was making a killing on this. And then we came down and we hit that 200 EMA. We came close to it. So I did a video and I'm shouting to the room, buy signal, buy signal. And I was screaming. Nobody else was talking about the 200 back then. I think a lot of fat cats stopped talking about it because of the retail trader. Now they're working with us. They wanted to throw us all in jail. They thought it was illegal for us to be trading their market. But they used to signal the 200 EMA and SMA on the daily and weekly time frame. Those are institutional buys right there. If they fail, we're in more trouble. But if they hold, they're a good reversal signal. As you can see right here. Boom! You got to zoom out when you're in doubt. So that was a SPY. And then I'm sitting here getting ready to call out the 50 SMA because I don't think this pullback is worthy. Although it's rigged. It's rigged. It's worthy because of there's been a disruption in oil. But I'm going to tell you, I think things will get a lot better. Maybe before they get worse. And if we can free this zone up, I think it'll be an equilibrium to lower prices at the oil field. Because there's been a war on oil ever since Obama took office. So let's make that clear. So we're at the 50 on the SPY on the weekly. If you go to the daily, SPY just went over the 200. So we're bearish on the daily. And that's what a lot of them fat cats talk about, is the daily. But I even heard one this week talk about the 3-year. And she was coming up with how much this stock was up, like 600% in 3 years. And I messaged the chick on Squawk Box and I said, it's up more than that, baby. Look at the yearly chart where you usually post charts on. It's up more than 750% in a year. I told everybody, and I posted, it's a sell signal on MU, and the thing dipped because it was way overbought. $61 all the way to $471, and they're calling out a trade to go to it's up 700 and some percent if you just do the math in a year. They were projecting this thing to break 500 and go to 600, and I'm going, are you fucking people nuts? Now we got a head and shoulders, so this could be a trade Monday, and we pulled back to the 21. And we bounced off that thing 2 days in a row. So that's a major support. I'd rather take it off the 63. Or maybe even off this triple bottom down here. But I think it's way overbought. Way overbought. SPX. I just wanted to bring up MU because I wanted to show you something that was overbought. So let's clear this. So here's the same thing. We're bearish on the yearly on SPX. So that's got to come back and retest this before it will become bullish. And we've got a triple bottom right down here. I mean, we could see a lot lower. That's a little bit higher low. So I want to take this body on the daily and run it up to that body. And then I want to take the wick. See, I don't know. I don't want to use that wick. I want to use this one. So I got the wick, and then the body and the body. And they both more or less, the wicks even bring it up a little bit higher. That'd be a very bad scenario if that happened. That'd be a very bad scenario. I don't see that coming. And then you got a head and shoulders right here. And we went below that. We bounced off of right shoulder here, the right shoulder here. And then we dipped down to hit that 100 EMA and bounced up, hit the 100 EMA and bounced up. And we could come back and hit the 100 EMA for the third time and have a triple bottom. But for right now, I want to put a trend line on the body of this candle right here and the body of that one. And that's going to be my support to hold. And we almost hit that. So that's the SPX. So I've got, I mean, I'm not bullish yet. I'm not bullish yet. The fact that we're under the 200, both the 200 SMA and EMA on the daily time frame. So you could get another pullback and bounce up off these, which would be that head and shoulders, or that triple bottom. That'd be that triple bottom. And I could probably see a possible reversal from there. I could probably see it on the daily. So maybe one more week of pullback. And I'm going to set an alert just right above that trend line. And I want to see if I can match it up with something over here. Right there. Perfect. You got that peak, and you got that peak body of that candle there, that hammer, that breakout. And that will go no, that's not right. I got to get real close. Yeah, it comes down here too. That's a tough decision. We'll just have to wait for Monday. But I'm bearish now because we're under the 200. So I'm going to set an alert. This is SPX. We'll see if that bounces off that 641787. Let me see if the weekly gives me a different confirmation here. Yeah, the weekly says that's the spot. There's another line right to it. I mean, that's solid. I don't think we can beat that. I think that's a winner right there. See, this is that on that IWM. You got a triple top breakout. Then it pulls back and retests that triple top. Or a quad top. 1, 2, 3, 4. Breaks out. There's your triple top there, fail. Which is a bearish pattern. Triple tops are bearish. You see a triple top, get out of the trade and be glad you saved your money. That you took your profit. And if it breaks out, buy back in. But sell a triple top. In the same example of that head and shoulders, it retested that triple top, and that was your opportunity to maybe get back, or that quad top, to get back in that trade. So that was the quad, the fourth time it broke out. Boom, retested, and then took off. Everything retest. We got a head and shoulders right here. Probably have to move it up a little bit. But that's the SPX, and then the QQQ. So on the QQQ, I don't trade this as often. Mainly it's SPX and SPY. But here at the QQQ on the weekly, we're closing in on the 50. I want to take this triple top breakout, and I'm going to run a trend line on that body to that body. So we had the triple top breakout, the retest, and boom! 3 black crows, boom! Triple top, drop. Now we pulled back to that support level of this here triple top breakout. And we're bouncing off the 50 SMA on the weekly. So that could be a buy signal come Monday. That's a solid support. If that fails, we might be going into bear market. Come down and hit this 100, or maybe even the 200 like we did once before. So far, we've not had a bad sell-off. We've just pulled back to support. So I'm not worried yet. I'm definitely not trading like I usually do. I'm more cautious. And then if you take this to the daily, it's all about chart patterns, moving averages, and being in the now. So we bounced off the 100, the 100, the 100, and then failed it. Now we're back down here at a solid support level. Support, 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 support. So if that doesn't hold, I'd expect more drama. Maybe to this next support line, which is probably, $50 drop. $45 drop, or maybe right here even, 544. 553. But that's a major support. If that doesn't hold, then we're coming down more. That's on the QQQ. But if you look at the weekly, we're at a support level. And I would probably trust that weekly more than I would the daily. So that's it. A couple great ideas on how to trade and what to look for in stocks, chart patterns, moving averages, and being in the now. See, we had 3 black crows. Boom. Had a gravestone, or a what is that? A dragonfly or a hammer. Just consolidated. So this was like a scalp trade for 2 months. Up and down, in and out, 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 in and out. Okay, that's it. Have a great day. We'll catch you later. This is the Sneaky Snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And just be extra cautious. There could be more selling coming down the road. This is not good that's going on. Be a disruption. It could last till the second quarter. And then maybe sometime in September, we have a big old breakout. Might be one of them months of September that I will remember. Like 2022 was. And I called that bottom. Let me show you something. I just can't stop showing you something, can I? So I was going to show you. Okay. You know, think about what I was going to show you. Let's clean this up. Well, I don't want to clean it up. We'll just show you. So this is when I called the big reversal. And people were scared to death. Scared to death. The year of 2022. Because we had that big sell-off. I'm sitting here screaming out. Telling you we're at support. We're hit the 200 SMA. We hit the 200 EMA. We're at support. Take these trades. I'm telling you, we're at support. Weekly time frame. So down here, I called this off the 200. We had 3 black crows. Again, the 3 black crows with an inverted hammer and another hammer bouncing off the 200 SMA. We bounced off the 200 EMA, boom, to the 50 SMA. Bounced back to the 200 SMA, hit the 50 SMA again for an exit idea. When using moving averages, look for what the candle hits the most for a resistance level and a support level. For example, the 50 SMA was an exit idea, inverted fallen star with an inverted hammer, and then we hit it again here, and then we hit it again here for the 3rd time, and we broke that triple top. And then it came back again. So I'm going to draw a line to this body, to that body. We pulled back and hit it again. We hit the right shoulder the second time. This is when I always say, if you missed the first one, don't cry about it. Wait for the pullback and see if it retests that right shoulder for the second time. Boom, we broke out. We have a head and shoulders. Left shoulder, head, right shoulder, right shoulder. Then it came back again and hit that right shoulder the 3rd time. 3 white soldiers, and you're out of the trade. What was resistance, the 63 EMA, now becomes support. resistance, 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 resistance. Boom! 3 white soldiers breaks out. Now becomes support. The 63 runs up to a double top for an exit idea out of the trade. 3 black crows take the trade, run it up to a head and shoulders out of the trade. Bull flag off the 100 with 2 engulfing candles. Boom. And you can use them as confirmations on the daily, but this is called, again, the inverse head and shoulders. You got your head off the 200 SMA, bouncing off the 200 EMA. Then the 200 SMA crosses the 200 EMA, and the stock runs up to the upside. And it bounces off that right shoulder. 3 white soldiers out of the trade in 3 weeks and made a bundle of money. Then you have a triple top breakout right here. Breaks out, comes back and retests that triple top. So that could have been a trade idea. Holding the support, 63 EMA and the 21. The 21 crosses the 9. Or the 9 crosses the 21. Couldn't do it here. Did it here. Respected it here. And then could have stayed in that trade all that time. As long as you held that 9 every week. Could have been in that trade for 5 months. And then when we finally broke the 9, you had a bull flag. So yeah, I use chart patterns, moving averages, and being in the now. And I'm sorry this was a little extra long. I could go on all day long. This is what I do. So y'all have a great weekend. Remember, inverse head and shoulders. Head and shoulders. The 200 EMA and SMA for real strong buy signals and sell signals that say you're under the 200. And you want to run it up to the 200 and get out of the trade. If you were in bear territory and you're running your stock up, exit idea would be the 200. And then let it retrace and then run back up and try to break it. Well, everybody have a great day. And hope you enjoyed your popcorn. See you Monday.